Greetings, fellow traders, and welcome to the Art of Technical Analysis. Before we begin, I want to state a disclaimer. This is not financial advice. Everything we discuss on this channel is pure for educational purposes only. So, let's start with the basics. This is level 1, macro term analysis with pattern formation methods. So, let's start with choosing a market. In this case, I'm going for the British pound, US dollar. This is a forex market. As the steps suggested, we should start by determining the length of history. It's a pretty large history. It's approximately 19 years, 17 years. But as we stated on the steps, try not to go further than 3 to 4 years back, perhaps even 5, because with the time goes on, the way of people thinks evolves as well, and also the markets. So let's start connecting the highs and the lows. I'm going for the daily, since I only want to look back 3 to 4 years back. It's approximately around 2016. Right, just put there a marker on it. Okay, now we're gonna connect the highs and the lows. We do that by connecting where the body closes of the candle at the highest point, and then the second highest point is from here. And as you can see, I'm connecting it at the body and not at the wicks. The reason for this is because I like to switch between lines and regular candles. I find the lines a far more better or more accurate way to connect the resistance line or the resistance points. By doing this, we're getting an obvious resistance with that. And now the thing is, if we change back to regular candles, and if we connect the wicks instead, right, it's gonna look like that, and change back to lines, and now you will see, hey, this is not connecting to anything. Well, the reason for this is when you go to the properties of the lines, the price source is at close. Hence the reason why we connect the bodies on with regular candles. It's possible to do it with the wicks, but as you can see, you need to keep changing the properties to high. And now the highs are connected, or actually the wicks. When I change back, you can see it here, but this is getting confusing, so you will have to choose which source you're gonna analyze the market. Well, since I switch up a lot between regular candles and lines, I prefer to keep it at close. So now, when we draw out the support line, which is about here, is the first support. This one is the first confirmation. So let's keep drawing that out. Let's extend this to this way. So now we can see a beautiful pattern emerging, and it looks like a descending channel. The next step was draw trend waves, and then we can go on moving on to making a strategy. We start off by drawing the first arc, trying to get this arc at the center of this top. And then the bottom, I would go like here. Now we got this trend wave completed. It's pretty obvious, right? The trend was from April 2018. Since then it's been a downtrend. Before that an uptrend. Now we got this beautiful wave. It found support here, which made it bounce back and retest the resistance and confirming it for the first time over here. So this is when it found first support. Okay. Now we want to determine whether this thing is going further down, and when it goes down, could it be going up again? Well, since this is a descending channel, at least it looks like a descending channel, which has a high probability of breaking bullish, otherwise reversing bullish. Let's finish this trend wave, the second trend wave. Let's make this solid, since this is pretty much a complete. A complete trend wave. Now we got a sort of a reference wave also, like that. So probably this is what's gonna happen. Before a pattern is completed and wants to break out or reverse the trend, it needs to be safe, at least it needs a second confirmation of the support. Let's change the opacity, since this is not confirmed yet. So now we have our pattern formation, and let's extrapolate to get a potential target of the breakout. There are two options on this case. We can start off by the entry point of the pattern and draw it to the top. Let's make it dashed, and then we copy paste this at the approximate or estimated breakout point. Let's say there. It's a really rough estimation, by the way, but it should be something like that. So this should be the first potential target around this price action level, and the second option would be pulling this, extending this from the previous breakout point somewhere over here. As you can see, this was a falling wedge pattern. You shouldn't worry about the which pattern they are. You can Google them all. You don't have to learn it by heart immediately. You will learn it by heart in time. Okay. Let's see. Yeah. I think there was a falling wedge. And it had to reverse again. Like that. So it's approximately here. Let's copy paste this to here. And then the next target could be around this point. Well, where should we short or buy or sell? I believe, since if we look at the previous waves, this should have been a beautiful point. Oh, let's take another one. This one could have bought here or longed here, and then exit here where it bounced back. So it was here or here, but the average points should be somewhere over there, of course, because now we know we got a rejection, and it should be time to retest the support. That's why we have this possible trajectory or trend wave trajectory. So when this plays out, I would definitely exit my short position there and open a long position up here somewhere. Or this is even a safer spot. If you want to be sure this thing is going to break out, I would wait until a candle closes above this resistance line. If you have a significant candle closing above this resistance line, then the probability of this thing going even higher or breaking out actually is immensely high. So that's level 1 pattern formations, macro trend analysis. Let's do another market real quick. Let's go for my favorite, Bitcoin US dollar. Look at that. It's already almost done actually. But let's begin at the first step, since this is for educational purposes. Alright, let's determine the length of the history. As you can see, Bitcoin's history is not that large. It's pretty short actually, 2015, 2020, so that's only like 5 years of history. Well, like I said, 3 to 4, maybe even 5 years, so let's go for 4 years. Or 3 actually, sorry. Let's mark it by why again the because in time people's way of thinking evolves as well as the markets do. Remember that. Alright, let's start connecting the highs and lows on this daily time frame. We can do it like this. Connect this point, make this a red support resistance color. I'll just extend this, and now we've got an obvious resistance line. Second, let's draw the support, start at the lowest point, connect the second lowest point, and let's make this a support color green. Now we have an obvious or apparent pattern formation. This pattern formation is called a symmetrical triangle. But we need to determine whether this thing is going to break out to the upside or to the downside, or just reverse bullish. Let's draw the trend waves first, since that's the second step we should always do, so we can clearly see what the trend is, what this trend have been, so on. As you can see, the trend, the bull market started here, the trend went up for quite some time, and it went down again. Found support here, confirming the first support. Let's make this solid, since this line is completed, and use this as reference-ish. Obviously this is the first confirmation of resistance of this pattern, so let's put an arrow here. Rejection by the bears, a huge rejection, because since then we are going down, as you can see. Trend has been going down, but don't get discouraged, Bitcoin holders and whatever. Looks like, as I stated on the previous market, patterns need to be completed, and we need a second confirmation to do that. So now will this thing found support here? Well, there's one thing you want to know about spatula triangles. If the price action level enters the bottom like this, it's kind of unorthodox, but still it's entering the bottom, so we can call this symmetrical triangle a bullish pennant now, which has a high probability of breaking bullish, otherwise reversing bullish. So for now I'm gonna expect that this is the trend wave of this pattern formation, and what I would do, of course, let's go back. Look how beautiful, how solid this pattern stays, even when how many times I switch. Anyways, As you can see, you should have bought here. The first bounce of the resistance, first confirmation. You could have bought here. You would have made, and sorry, let's say exit here. Exit your long position here, or sell your bitcoins to take profit. Then you would have made approximately 220% with zero leverage. Imagine if you 10x that with leverage, that would have been 2200 increase. Anyways, let's not dream now. We are here for educational purposes. Well, if you've shorted here, close your long position. I guess it would be obvious to enter a short position here as well. So now the question will be, should I exit now? Could this thing actually go like up again? Or is this thing gonna follow the trend and retest and confirm the support for a second time? Well, if this happens, ladies and gentlemen, exciting times. I can promise you that. So if the price bounce back up here, a safe spot, a safe spot to enter or exit. In this case, exit your short position if you have a short position open. Exit here and enter a long position from here. This could be a safe place because, as you can see, it's all, when you're trading, it's of course all about damage control. In case it does break down or break through this support, then you want to have a stop loss. And look, and like we said, once a candle closes above or beneath the support, in this case, and it closes resoundly or significantly, then you want to have a stop loss, otherwise you might lose a lot of money. Look at that, it's 10%, which is pretty okay. I think that's the maximum though. I'll go more like 5% if you go with no leverage. 5% is a lot with leverage, with high leverage, so be careful with that. I would say go even lower after when it bounces, so you can get this to like 2%, perhaps even 1%. Let's go dive deeper into this thing. This is why you want to draw trend waves. Now you can be very precise. So when the price bounces from here, from the 5k region, I would set my stop loss approximately at 4900. It's very tight, but it's enough. This should bring me to a 2% stop loss. So when I do a 5x leverage, that would be 2 times 5. That would mean that if the stop loss get triggered, I will lose 10% of that amount. Well, that's doable, I would say. So I guess this would be a beautiful point to enter. Let's extrapolate a target, a potential target for the breakout. Remember, start off where it enters. In this on this case, where it enters, and the top. Oh, let's not extend this. Let's give it a different color as well. And since this is an extrapolation, let's make this dashed. There we go. Let's copy paste this to the approximate breakup point. Remember guys, Bitcoin tends to break out even sooner than expected. As you can see, this is an apex, this point here, this region here, and normally price action wants to keep dancing on this area until it reach well, the point of it has to go a side, whether it's up or down. But Bitcoin does tends sometimes, most of the time, sorry, to break out sooner rather than later. All right, now we got a potential target. As you can see, it's a pretty radical target, but this is cryptocurrency after all. That would be, let's see, our first target is of course the resistance. Let's keep that like that, and our second target will be the breakout target, right? And that's about approximately 440-ish% from the bottom. And when you enter it from the top or from the breakout point, which is of course the most safest point to enter this long position, since like I said before, if a candle closes above this resistance line significantly in this daily chart, yeah, then you might want to open a position somewhere over here. I would say 8,000 US dollar is a beautiful psychological number, and I would set my stop loss actually somewhere here. So when this thing goes down and closes underneath, then you could get something like this and it still goes down. So you want to keep your stop loss short tight, but you don't want to get this thing triggered as well. Well, this thing maybe just bounce off the resistance and still heads back up, breaking out, reaching all-time highs actually. Hopefully. Look at that. That's a life-changing target if you ask me. Holy crap. 430%. Well, from here it's still like what? 230%, 240, something like that. Wow, that's a beautiful target. So investing or buying from here, accumulating more bitcoins if you're a hodler, this would be a beautiful spot to go to buy. Well, that's pattern formation for you. This is only level 1, the macro trend analysis. Hopefully you've learned something from that. If you didn't understand something or I was going too fast, please let me know or leave a comment. And don't forget to like and subscribe.